I'm Keith McCullough, and welcome to another real conversation with somebody that all of you keep asking for more of. So, I deliver. I can deliver from time to time.
Hey.
I delivered on the pants today.
Anything north of 50% on delivery is stellar.
We didn't coordinate, but
we did.
We will get into everything from the Fed to economic gobbledygook and whatnot. What did you think about Powell yesterday?
I think he slowly lost his temper. It was like watching a kind of an uptight white boy Chevy Chase waspy snowball get bigger. And bigger and bigger and bigger, and finally he just lost it.
Because he tried to start it like really professional.
Scripted, I'm ready for this, and those two dissents are meaningless.
So what do you think got him snowballing? The questions, or?
Yeah, I think the constant pressing and pressing and pressing. It's when he started to use the word efficiency over and over and over again. I'm like, I bet everybody in that room was sick of hearing Powell say efficiently.
Mm-hmm.
Because that means it's like stuck in the back of his brain. Efficiently means we're not going to go back. Mm-hmm. Once we start to cut rates, we're not going to stop cutting rates, but because we're going to be efficient means we're also not going to cut rates and then reverse like we did.
Mm-hmm.
The more he said efficiently, the more the markets went down.
Mm-hmm. He was talking about how they had the best meeting they've ever had, and then I thought it was rather peculiar.
Yeah, like if there were padded walls and people had on padded gloves and stuff, that has to have been an ugly meeting.
Well, you get the two dissenters,
mm-hmm.
and I thought it was an odd comment when asked about Waller's or either Bowman or Waller's estimates. He's like, we don't discuss individual forecasts. Like, is that a new rule at the Fed, or?
Well, what they don't do is reveal the identities behind the dots on the plot.
But everybody knew.
Sure.
Yeah.
He was very defensive about it. It was clear that on Tuesday afternoon that he was not going to bring, by the way, his former buddy, right? Waller used to be his chief lieutenant, mm-hmm. closest confidant. It wasn't until March when clearly Treasury Secretary Scott Bessent said, you need to start tapering QT. And at the time, I think Waller said to Powell, why? We got past the debt ceiling incident without incident. So why are you insisting on this massive taper down to just $5 trillion a month when we need to continue to shrink the balance sheet? And then Powell did it anyways. Mm-hmm. And then those two parted ways.
So what do you know about the interrelationship between Bessent and Waller, Bessent, Powell? Are these like direct discussions? Is it different?
Bessent and Powell would be a direct discussion. So the tapering that occurred in March was very much, chair of the Fed, secretary of the Treasury.
Yep.
It was that level. Mm-hmm. Bessent knows what's happening now. They're going to pump up $1 trillion he's going to pull a Janet, even though he said he wouldn't. Mm-hmm. And I think that Bessent wisely knew that the less liquidity that the Fed was effectively pulling out of the system, the smoother this operation would be. Mm-hmm. And to not necessarily have it accompany when you're going to be refilling the nation's checking account. So, I think that was a behind closed door agreement between Powell and Bessent, mm-hmm. and that other people who have been huge advocates of continuing to shrink the balance sheet were not really brought into that discussion. Mm-hmm. And on the plus side, the housing market's getting to be so bad, and you're seeing so many desperate refinancings occurring. My God, Fannie Mae yesterday, a year ago, they had $300 million that they were able to take out of loan loss provisions. Yesterday, they reversed that and took $946 million of loan loss provisions. I mean, obviously there is a finally serious ramifications, meltdown going on in the housing market. If Fannie Mae's taking $946 million, mm-hmm. imagine what these mortgage brokers are. I mean, it's just biblical what's happening. However, that's good for the American people in the sense that they did not touch the $35 billion a month in mortgage-backed security QT. So that puppy's accelerating. And that's good because the New York Fed, it's not, I don't often sit in this chair and tout anything that Fed's doing, but the New York Fed did publish a blueprint of how to reduce their mortgage-backed securities holdings through the end of the year 2035. And it's pretty apparent that at least the current makeup of the Fed, that if we go to some kind of an Armageddon scenario and relaunch QE, it looks like MBS will never be part of that again. And that's really good news for the housing market, because we had runaway housing prices to a greater extent this time around because the Fed at its peak had a 39% footprint in the mortgage market. But that's continuing at pace. But the Waller-Powell division occurred in March.
So back to that on the dynamics of the discussions. I mean, to be clear, if I was invited to this, I would decline a visit to the Last Supper, I think, before I went to like a Fed meeting like this. But because I'm not a fan. You're not a fan.
I'm not a fan right now.
We'll get into that. I mean, you did write Fed Up, which is a great book.
Yeah, but I was kind of pro-Powell-ish for a little while, but anyways.
But now
I'm not.
So the dynamic, so the conversation between Powell and Bessent, how about the discussion between Bessent and Waller? Is that, or Bessent and who are the candidates to take Powell's
job? Now that's a discussion that Bessent has to have.
Yeah, exactly.
So Bessent must interview all potential candidates.
Yes, what do you know about that?
And the thing is, so I was in Greece. This is not like a spray tan gone wild. I was in Greece, and to watch the coverage of Powell and Trump and the hard hats, the international press, it was like it's cartoon day in the news. They made fun of it. It was so embarrassing. Yeah. So embarrassing. And guess what? Uptight white men from Chevy Chase don't like to be embarrassed. It's one thing to be ridiculed and I don't agree with your policy and too late Powell, but drag me around a building under the pretense of talking about construction costs and humiliate the shit out of me on the global stage. That was the anger you saw at the end of the press conference yesterday.
I kept saying this on like my macro show or on the call. Like my immediate response to clients, they're like, well, what do you think about that whole thing? And it's like Trump 101 clowning. I'm going to put a white hat on this dude who's never been at a construction project in his life. The hat doesn't fit properly.
With
and I'm going to be taller with my white hat. And it's just pure, outright, unadulterated clowning. And the Fed had to say, and even in the presser he was asked about it, and he said, well, I thought that it was a great visit. So now we're all just lying to each other.
Yes. And I think that that's what's changed. But if this continues, Keith, I know Powell wants to leave in May. Powell can leave in May.
Why can he leave in May?
Because that's when his term's up.
Oh, next May. Okay.
Next May.
I think, okay. So that's down
Some
the line.
are going by quickly.
Yeah, exactly.
No, Powell can leave. He doesn't have to leave until May. The Supreme Court recent ruling indemnifies Fed leadership. Bessent keeps reminding Trump of this. Hey, you can't fire him legally.
Yep.
And by the way, checks and balances, that also brings into the fact that he was thumpingly confirmed and reconfirmed by a huge majority of senators. So you're battling two different contingencies. The Supreme Court who's already said no, and Congress that would say no. So Bessent has to keep reminding Trump, you cannot fire Powell. You can't. You'll lose.
But you can embarrass him so that he resigns. Can't he resign?
Well, now Keith,
the man with the white hat.
Let's talk about spite. Because right now Powell is making the wrong choices out of spite. He's not lowering rates. And there's another reason, actually. There's two reasons he's not lowering rates. But one of the reasons he's not lowering rates is out of spite.
Like self-righteous spite, like I'm right in my how I'm tacking here.
No. It has nothing to do with data. Zippo.
Just spite.
Just spite at Trump. And I've been writing about this pretty extensively. Like something I published a few weeks ago is, I think the title was like, Powell stoops to Trump's level. Something really subtle like that. Because it was. My editor was like, I'm the boss. But right now he's stooping to politicking.
Okay.
And he would otherwise be cutting rates. Period, end of story. There was a third dissent yesterday. Guaranteed there was a third dissent. Why? Okay, so at the end of Tuesday, a full day of meetings that don't go very well, mind you. The data was very much on the side of the doves that came out on Tuesday.
So the meeting did go well. The
meeting didn't go well.
The
End of the day
construction tour didn't go
Tuesday.
well.
So end of the day Tuesday, he's like, okay, I can't talk Bowman and Waller back. So poor Nick Timrose is in the middle of dinner. All right, for God's sake, gets a phone call. It's the bat phone, and it's like, couldn't talk him into it. Go write about it now. We can't surprise the markets. So at 9:02 p.m. Eastern, this story from Nick Timrose is printed on Tuesday night that says, so we get dissents. Big deal.
Yeah.
Let's just move on from there. We expect it. And now that I've written it, you expect it. and we move on. So had the statement remained as hawkish as it was at the last meeting,
Yep.
he didn't have to change a word of the statement after Timmy Leaks was summoned on Tuesday night from his dinner. And yet they changed the language of the statement. So he's placating somebody else.
Okay.
Probably Austin Goolsbee, who they might have had to bound and gag to not dissent. Quid pro quo of some kind. But the quid pro quo for the moment was the softening of the assessment of the economy in the statement. That was the give to not have a triple dissent. When, by the way, Adriana Kugler was not voting for personal reasons. So you had 2 out of 11 dissent, 9 out of 11 didn't. 3 out of 11 would have been really bad optics. So he placated somebody. And we'll know in the next few weeks, depending on the minute that dove opens their mouth, who did not dissent, we'll know.
So he's placating, he's lying. You know,
He's lying.
This is not the Powell that because you've been very.
Do you want to know how?
critical.
Do you want to know how he's lying?
Yeah, I know how he's lying in certain
No, I
degrees,
want.
but
I
if you
want
want to give me more, then
I want to show Powell how he's lying. Can we
Okay.
pull up a few charts? I've never done this before, by the way.
Well, you can tee up charts here. Just call them up by number.
Okay, so this is 12 million American employers that we see up on the screen. The private-only U.S. employment sector in the second quarter of 2024 shed on net 163,000 jobs, which is why 89% of polled economists no longer believe the data. Can we pull up Q3? And there's a negative 1,000 there, private sector, net job creation. So now, if I was, you're going to play Powell. I know you're going to love it.
Oh, yeah.
If I say to Powell, in the Eccles building around that big brown, gorgeous oval table, Jay, if you have 6 months of negative job losses, what happened before that 6-month period started? And Jay would go, well, unemployment's a lagging indicator, ergo, recession started in the first quarter of 2024. And you go, Jay, you've learned a lot even though you're a lawyer. Good for you. Now we go to Q4. Q4, you see, are we in Q4?
That's Q3, guys. Next slide. Yeah.
So now we go to Q4. So this,
Yeah, I can look at this one. If you can you see that one?
this came out, yes, this came out yesterday morning, the day of the Fed the Fed meeting. And I'm sure one of those 786 PhDs showed this to him. And they're like, look, sir, the economy rebounded in the fourth quarter, but This is why Trump won, because there was net job losses in the 6 months leading up to the election. So the people who were being lied to and told that we were not in recession were pissed at this point and voted the incumbent out of office. They were euphoric for a hot minute because they thought Trump was going to change the world overnight. Let's go to Q1. And we're back in the negative. So this is what we call a double dip recession. So the economy fell back into recession in the first quarter of 2025. Let's add them all up with the next slide. So this is what cumulative 12 months ended Q1 2025 looks like. You're at 378,000 jobs that have been created, all government. Let's go to the final table. So Chair Powell, how do you characterize a monthly run rate of 32,000 jobs that have been created? How would you characterize that? Would you call that a solid job market? 32,000 jobs a month, all in government? And Jay would go, no, because this discussion all happened yesterday at that meeting. And yet he went out of the gate saying the labor market was solid. God bless him for doing so. So the PhDs right now at the Fed are losing their effing minds because the imputed data that's reported every non-farm payroll Friday, i.e. tomorrow, those imputations are corrected when the 12 million American employers report what I've just shown you. And they know it. They know the birth-death model goes into the ether. They know we're in a double dip recession. It's evident in the data. And Powell's like, I know, but he embarrassed me on TV in a hard hat. So we can't do what we need to do, so we're not going to do what we need to do. And if Bowman and Waller, they're Trump appointees, and the staff is going, so are you, a Trump appointee.
Yeah.
And you're a Republican, by the way. So what are you doing trying to drive this economy into the ground by holding off on lowering rates? For God's sake. The Cleveland Fed new tenant rent index, which came out yesterday, I mean, they have to have had the Cleveland Fed staffers in the basement. Don't let them out, whatever you do. Because on December the 18th, Genius Boy at the podium after the December the 18th meeting is at his press conference, and he was like, I think, and this is Waller's analysis, I think that we should be looking at more real-time inflation gauges. In fact, I think we should be looking at market-based core PCE. But rather than the OER imputation of owner's equivalent rent, we should be looking at new rents. And so he speaks to the Cleveland Fed's new tenant rent index in December after the FOMC. And then his most brilliant statement ever, which you can tell it's like Waller's writing this shit down from one word at a time. He was like, because we know that new rents is market rates. And I went, did he just say new rents is market rates? Are market rates, pal. You just grammar. But he said it. It's in the transcript. But we know that new rents is market rates. And I'm like, okay, if you insist. So he taught the economics community in the blink of an eye to look at market-based core PCE, which exists, it's published today, and then substitute out the only imputation, which is owner's equivalent rent, which you know is, you're good at saying bullshit. Bullshit. The OER is bullshit. Substitute in the new tenant rent index. What do you get on a year-over-year basis? Yesterday morning. Why was the Cleveland Fed staff in the basement? Because on a year-over-year basis, the inflation metric that Jay Powell suggested in December that we all use is negative 0.3 year over year. The economy is in beep deflation. And he's up there saying, we've got to fight deflation. We've got to fight inflation. So the Fed staff right now has lost it.
Well, they have. I mean, this is consistent at least.
It is no. He's ignoring the staff.
No, but I'm just saying that's consistent behavior amongst any Federal Reserve head. Is they pick the data that fits their current policy. They don't pick the rate of change of the economy.
Well, right now he's picking anything that pisses off Trump.
Right. Well,
that's it.
That's what I'm saying is that
it's not even policy.
It's not unique to him.
He's not data dependent. He's he is just, right now, it is what's going to piss off Trump the most.
Yeah.
That's what we're doing.
So this is why Powell, because of all the people I've heard you talk about, from writing Fed Up to, what, you wrote Fed Up in what year? It was a while ago.
2017.
Actually, the byline for Fed Up, which I had to make sure I had, an insider's take on why the Federal Reserve is bad for America.
Again,
Okay?
I'm really good with subtlety.
So again, now Powell will get into that too. He said, as everyone knows, the Fed is good for America. He said that. He actually said that.
How many times did he say we're making monetary policy for the public good? And I'm like, do you know, have you ever heard of a student? Of course you haven't heard of a student loan. You were born with a silver spoon in your mouth.
Yeah.
So why would you know about something called a student loan, or the fact that, oh, I don't know, tomorrow, August the 1st, interest starts to accrue. And, you know, the St. Louis Fed just presented to you that credit card default rates are rising the fastest among people making $150,000 or more. Are you tone deaf?
Mm-hmm.
And because they have huge student loans, and they didn't qualify for the Biden's 24 flavors of forgiveness. So now it's spending individuals, it's higher net worth individuals, and they're the same ones who are being replaced by AI. They're the same middle managers that CEOs all across Silicon Valley are bragging about firing. The same exact cohort of people out of a job, used to make a lot of money, took out credit card debt during the pandemic because they never thought they'd have to repay their student loans. They drive a BMW that they cannot afford. They have a huge mortgage for the first time in their entire lives. Their adjustable mortgages just reset higher, which is why 80% of adjustable mortgage holders in the United States right now are relying on credit cards to pay their bills. These people now have, as of tomorrow, interest accruing on those student loans that they now have to repay. Mr. Powell, that's the public interest. That's it. Mm-hmm. And he's doing nothing for them. Mm-hmm. He's not doing anything for the poor people. He's not doing anything for middle income earners. And he's sure as shit not doing anything for people who earn more than $150,000 a year. Nothing.
She should tell us what she really thinks. You know, no, but he's just mean reverted to what every other head of the Federal Reserve has done. They are data selective, they're not data dependent.
True.
And that is where he's at. And to support your political message, that's what you have to do.
Yep.
But if you actually just take, let's just take what I did. The market, first of all.
Oh, the market, this has nothing to do with the market.
No, but markets.
Market cares about flows.
No, but the market also cares about the rate of change of data. So the data, to your point on labor, if you were just to isolate that, labor and inflation were slowing at the same time during the stock market crash of 2025. We were positioned appropriately for that. By the bottom of it all, the rate of change data didn't get worse across the board. In fact, inflation went up, right? So they're like, shit, I can't have inflation go up, so I got to stop with this rate cutting thing. But that's empirically what happened. Right? It wasn't deflation from there, or I wouldn't have gotten paid owning asset inflation. Right, so those are two different things. I know what you're saying. That
asset inflation is different than you are correct. There are, and by the way, they had the PC report in hand, but not the payroll report.
Right.
You get it 24 hours in advance if you're like Janet/Scott.
But anybody can see any rate of rate of change data, as you well know, but most people should know, has been slowing since 2021.
Yep.
Like on a trending basis.
But
so labor data, that shouldn't have been
Where do we have accelerating inflation?
Well, we just had it for a month.
Well,
and now we're going to have, on our nowcast, we have it going back down.
Well, right, because if you dig into the entrails of the data this morning, your two biggest areas of growth month over month were furniture and RVs. Mm-hmm. RV sales are down 13% year over year. Now, RV manufacturers have no choice. It's more expensive to make what they're making. The fact that they can't sell what they're making is problematic. I believe they call that a margin squeeze from hell. Furniture makers are going bankrupt left and right.
Yeah, anything that's rate sensitive has...
Well, anything that you would put in front of a home, put inside of a home, all that other stuff. So these are the areas of services inflation in the PCE this morning was flat as a friggin' pancake. Mm-hmm. And by the way, food prices went up a touch. So people are canceling their vacations. They still hate inflation because the inflation where they feel it the most is still in essentials, as far as they're concerned. So they don't think inflation's been whipped.
No.
But they do know that their family doesn't like them anymore because they've canceled their vacation. Because if I have to put food on the table and spend more to do so, gasoline prices went up last month. If I have to spend more money to fill up my gas tank, and my wages are falling, because wage disinflation is becoming ingrained. An Uber driver, my mom lives in College Station, Texas, which happens to be one of the fastest growing areas of the planet. I do not know why I don't like Aggies at all. I don't like Aggies. But I will tell you, just FYI, Landman himself was like right down the street from where I lived just a few days ago in Dallas.
Was he?
Yes, he was. They had to close Highland Park Village. It was so cute. Anyways.
She likes Landman.
I digress.
If you didn't hear her last
I thought of Texas, and then if I think of Texas, I think of him. Anyways. But my point is, an Uber driver in College Station, if he was or she was asked to go pick up somebody and take him to George Bush International Airport in Houston, what they would pocket from Uber or Lyft a couple years ago, plus tips, was $90. Now it's $35 to $40. Why? Because the exhaustion rate, which is not me tired and jet lagged, the exhaustion rate is the percentage of Americans who are collecting unemployment rates who have run through them. Connecticut has 26 weeks of unemployment benefits if you lose your job. If after 26 weeks of collecting unemployment benefits, you still don't have a job, it doesn't matter. The state's not paying you anymore. So you've exhausted your unemployment benefit. The exhaustion rate for continuing jobless claimants is 39.6%. 4 out of every 10 Americans collecting unemployment benefits are running out. And that means whether you like mom and dad or not, or conversely, whether your parents like their children or not, they're moving in together or they're homeless. And there we have Powell, ignoring it all.
Well, for our work, I don't think anybody who's empirically driven would argue with labor data slowing, and parts.
But he is.
Yeah, but that again, like I said, that's par for the course. It just so happens that he just went back to playing par like every other Fed head has ever done. But from my perspective, it's like always the next play. That you have actually now they just cut rate expectations all the way down to I think 40%.
40%.
Right?
For September.
But if we're right,
and it's my birthday. I don't get a rate cut on my birthday, it looks like. Oh, well.
Guys, show our inflation nowcast. And I know how he's data dependent. The most accurate inflation nowcast, as anybody in the institutional investor community knows, has been ours. Right down to, it's been directionally right in terms of rate of change 100% of the time since introduced, and it just called the most recent acceleration in inflation after calling a decel. So now, the 260, actually, that's our first tick down again. So the way that we're thinking about this is the only thing Powell has left is the thing that Trump or that I affectionately call Pump and Dissent are going to want the most are that data point. Because then they'll say, see, I told you so. Inflation's going down. It's not going up. Inflation's going down, labor's going down, and the Fed still won't cut rates. So it's purely in terms of, in your words, spite. That it's
pure spite.
But he couldn't do it if you take the two big things. If you take the two big things, one of the big things was going up.
He moved the goalpost yesterday.
But there's 2 weeks until we get that number.
Because, did I mention Texas and Billy Bob? Anyways, in Texas, we have this thing called a border with another country, and it's closed. Mathematically speaking, that means that your unemployment rate can stay lower. Because your denominator is getting smaller. And yesterday at the podium, he was like, non-farm payrolls, they don't matter anymore. Sorry, we're only going to look at the unemployment rate going forward. And I'm like, because we can't do math, and we don't know that the border's closed. But he literally yesterday moved the goalpost to an unemployment rate figure that's going to go in an opposite direction because we're deporting people.
But they can and they know, because that's what Waller's dissenting with, right? Like he's not dissenting without labor.
Yes, but they're saying that Waller and Bowman are trying to curry Trump's favor to become the next Fed chief. So everybody just dismiss.
But anybody analyzing labor data should know that during the stock market crash of 2025, which I keep reminding people happened, there was a window of opportunity for Powell when that inflation was going down. It went from 3% all the way down to 2.4. He could have cut by 50 basis points multiple times, but he missed the bus. So now he's on the wrong side of, that's my question, like, don't you just think he's on the wrong side of it for another 2 weeks and then he has nowhere else to go other than to get run, like quite literally run over by the bus?
Given what companies are announcing, right? We had Challenger, Graham Christopher this morning, and layoffs went in June, right back up. Oh, and by the way, 3,200 hiring announcements for the month of July. It's only a data set back to 2001. We've never seen hiring plans as low as they are in the history of Challenger data. And firings are going through the roof. And I just explained to you that there are too many Uber drivers, or their pay wouldn't have been halved because people are like, am I going to collect unemployment benefits? How much do I get a week from the state? Hell no. I'll go drive for Uber. Mm-hmm. But it's a supply-demand thing. Mm-hmm. But they're invisible. You don't see people who would be collecting unemployment benefits if they're driving for Uber. They're invisible. Mm-hmm. And by the way, they're counted as employed. They used to have a full-time job with benefits. Now they live with their mom they don't like, and they drive for Uber as much as they can.
And on the other side of that, there's what's on the tape, right? Like there's AI who's taking your job. Mm-hmm. Those who own content companies and get to do more with less get to get paid more. So
I've heard OnlyFans income's going down.
But this is like...
You know it's a recession when it's just YouTube, but when it gets to OnlyFans, it's a friggin' depression.
But today, the NASDAQ earnings are up 18.5% year over year.
Oh yeah, and the big boys are...
Yeah, so it's not like... Nothing is ever in a vacuum when you look at economics, especially if you look at it in terms of your detail.
I find great comfort in the fact that we have a higher concentration in just a few small stocks than we did in 1929. I mean, screw magnesium at night or what? No, you can just sleep on that ship.
So back to the point on CPI. As soon as they get their dovish CPI, does that open the runway for more clowning hard hat events, more shaming? Like, how do you get the guy to either just cut with the data?
Now you're assuming that Trump understands economic data. So,
no, Bessent
does.
100%. He gets the nowcast that I just showed you.
Yes,
he knows what it's going to be. If you actually watch his comments.
He knows.
He actually said right before the last one that it was going to be up.
I promise you that yesterday morning at 10 o'clock that Scott Bessent got the revisions to payroll data, bed data. People are like, what data? He's really smart. He got the bed data, and he got the Cleveland Fed New Tenant Rent Index. He's in the weeds. He's so damn smart. So he sees shelter deflation on a quarterly basis. That sucker was negative 9.3. Mm-hmm. Because even though apartment living is more affordable than buying a house, there's roommating going on. There's bunking up going on because people still can't afford the rents, which is why rents fell by 9.3% in a quarter. So Bessent sees the shelter deflation coming down the pipeline that's the biggest input to CPI. It's an undeniability thing, and he knows that services disinflation is entrenching. The conference board told us that when vacation intentions 2 days ago went right off a map, while at the same time people's perceptions of the job market, jobs are hard to get, rose for a 7th straight month to 18.9%, the highest since March of 2021. We've never had 6 months of a rising hard to get inside conference board outside of recession ever. So Scott Bessent is smart enough to know that the fucking economy, excuse my French, is in recession. Powell and him get along well, but his boss won't stop humiliating Powell.
Well, I know him well, and I wouldn't say that he would call it. You keep saying recession.
I just showed you it's a recession because we've had
it's
job
a recession
losses.
in labor data. It's not a recession
But labor data is the most lagging. I mean, unless it's different this time, since the 1900, we've never had job losses unless we're in recession.
Yeah, I think
because job losses follow being in recession, and it looks like the economy came out in the fourth quarter.
Well, you just nailed it. It is different this time. It was. You had GDP was just stated at yesterday. It's 3% sequential. 2% year over year.
Okay, but business investment has led the U.S. economy into and out of every recession. No, I know.
I'm not as smart, but I just define recession as GDP, right? Like you don't.
Recession is defined by business investment.
I define it as what's in my account because if I'm positioned for a recession,
which
I've been
now you're talking
multiple
about
times.
Wealth. Now you're talking about wealth.
No. If you're positioned Danielle, not very many people are good at risk managing what a recession looks like in their accounts. Like if you're positioned for a recession, you can make a shitload of money in your P&L by understanding that, first of all, it's actually more about the probability rising of a recession. This one, the probability went straight up into April, but then it bottomed. And as the probability of a non-recession happened, you got paid to take the other side. We can't just claim that you're in a recession in the second quarter at 2% GDP.
The words, it's different this time, do not come out of my mouth.
No, but it's not.
Because on average, it takes 5 quarters.
I've called every recession there is. It's when GDP is negative for back-to-back quarters. And
in my view, when you have 6 months of net job losses, it's a recession.
Okay, well then you just have a different definition of the score. But
only back to 1900. But yes, it could be different.
But you're saying, yeah, exactly. That's.
I mean, but
it has
been.
But
again, they're words I've never uttered. I don't care about trade wars and trade flows and spiking imports and crashing imports. I care what businesses are doing.
Yeah.
And when you have business investment go from 10.4% to 1.9%, something is seriously wrong.
There's no doubt about that. I mean, we're short housing, we're short healthcare, we're short plenty of things that are slowing, but there is not a reported U.S. recession looking backwards.
There will not be. No, the National Bureau of Economic Research is populated by 100% Obama appointees.
Right.
They're never going to say that job losses that occurred when Joe Biden was in office, that a recession occurred then. It ain't happening.
But
they do not like. They don't like Donald Trump.
Like back then, you can be very specific. Like if you go back to 2022, the recession that we called in global industrial production growth, in U.S. industrial production growth, in U.S. corporate profit growth.
I'm not talking about those are industrial recessions, profit recessions. I'm talking about plain vanilla recession, which we've just demonstrated with job losses for 6 months.
But Bessent's not going to say we're in a plain vanilla recession.
Bessent's never going to say we're in a recession.
No, but
it's
because
his job.
You're not. GDP's 2.
Is it? Because the first.
It was just reported as 2. It was yesterday. You saw
it was reported as 3%.
Yeah, it's sequential, but 2% year over year. Right? I mean, that's not what you're saying. I just want to make sure that everybody gets it clear, because I think sometimes you get like a bad rap on this. Is like, well, you guys don't know what you're talking about. You're saying that there's no recession. Like, that's not what you're saying. You're saying that there's a recession, rolling recession, which there's been since 2022 in parts of the market. And there's a developing recession via the labor data.
Well,
and unless it's different this time, you're going to have a full-blown recession.
We came out in the fourth quarter. The job losses stopped after the election.
Right. And then they
started again.
Yeah.
But
that's exactly what the market did.
But that 6 months, I'm telling you, that 6 months, because they're all Obama appointees, will never be recognized as having been a recession. They'll never call it. We're the only country on planet Earth that has an arbiters in a business cycle dating committee that determine recession or expansion. We're the only developed country in the world that does that. Every other country just goes by numbers, but we don't. And the NBER is never going to say that in the 6 months leading up to the election that the Democrats lost, that the U.S. economy was in recession, and therefore the Democrats lost the election. It makes way too much sense, but they're never going to admit to it.
Well, just in terms of the empirical data, I mean, it's much more obvious that the Democrats had one in 2022. You know, that was a full-blown 9-month stock market crash.
When was Amazon's first mega layoff? Who started this whole thing?
Yeah, but now we have this resurgence. I mean, did you see? I'm sure you saw Meta and Microsoft's numbers.
No. Those numbers are good, but why do they keep firing people?
Because they don't need them.
I know.
Yeah, I mean, I run the same kind of business.
But the more people you fire, even if you're selling AI and at some point there will be consolidation in AI.
Yeah, but this is the part of the labor market. Life is this time is different. The one-liner. To me, it's for the birds. Life's always different. Right. It's not.
And this will evolve. And DeepSeek has taught us that there are too many cooks in the kitchen. Right? Yeah. The problem with my Longhorns is that there are 10 billionaire benefactors for this one college in Texas, Arch Manning. One college, 10 billionaire benefactors, too many cooks in the kitchen.
Yep.
So if you have too many people on one side of an argument, it's gonna end badly. If AI advances are such that it's going to keep rocking, and you know quantum's out there, then there are few too many trillionaire market cap companies, because at some point cannibalization is going to occur, and you won't need as many of them to accomplish more. And yet they're all investing like they're all going to win. They're all investing like they're going to be the one to do quantum, they're going to be the one to come out on top, and they're going to eat their other competitors. But that's not how Darwinism works.
It's what we have. We have
It is what we have, and what you're saying we have is advancement, innovation, constancy of it, which means that somebody's investing too much money that they're not going to make back. It means that Apple, since it failed on the AI front, might actually have to create a battery that lasts for my iPhone. That's a thought.
What's most interesting to me is the Fed's favorite word, like data, which they don't analyze with any level of competence or rate of change accuracy. But what we've found is that computing power, AI, anything that we add incrementally to a process that's been built for 18 years here, has been only making things more accurate.
Right.
Whereas the Fed's getting less accurate, but getting more political. So to me, that's kind of like what we're going around.
I mean,
it's like they know, but they don't want to talk.
Somebody finally said, we need to have AI attack healthcare, and I'm like, yesterday. Our costs are double that of any other developed nation. Yesterday.
It is attacking. Healthcare has been the best U.S. sector next to housing on the short side, as I said, which is
because it's got the greatest potential to become more efficient.
Yeah, no pricing power, just pure bureaucracy. Yeah. So that,
which is good. I can wait to get my knees replaced. It's going to just get cheaper.
But to me, it's still the Fed's lying. Fed up is still applicable today.
The Fed's lying.
Yeah. And
Powell stopped lying for a while. Let me just be really clear about that. For a little while, he quit lying.
Yeah, you were a fan, actually.
Now I was appreciative of his trying to. I was appreciative of his trying to reform the shadow banking system.
Yeah.
Trump won the election, and I went, that battle's lost.
Yeah.
The banking lobbies, the private equity people, they will come in and any idea. I'm sorry, but they all are back to being king of the day. They're never going to get regulated.
He's lost one of the most important fans there are. Because, for you to defend him back then for him, that was pretty cool.
Yeah.
And now you're not.
You're
saying he's lying.
He's lying. The only thing, the labor market is not solid. He can kiss my ass. The only thing he's doing right is trying to push through central clearing of treasuries.
Yeah.
That's it. And that is a matter of national security. But it's not him alone. I mean, this is Dissent also, because it's his job. He's the head of the Treasury, and if you centrally clear treasuries, then you protect their happy asses. If the biggest hedge funds in the world, like they did on March the 23rd, 2020, back off and hit the kill switch. If you have central clearing of treasuries, you're never ever beholden to a single market player again.
Oh, by the way, I meant to ask you about that just because you just triggered the thought in my mind. What do you think about treasuries and Dissent, tethering, pardon the pun, but stable coin to the treasury market, like in terms of demand? Have you written about that at all, or is that?
It's effectively
because it is new.
So, with full credit to Mike Green, because I didn't say it, he did. Stable coins are like a risk-free asset with no coupon. It's the best characterization I've ever seen. I actually thought you were going to ask me about the Fed retiring. Increasing their buybacks of treasuries.
Like we can show the recent data, but I mean, it's like if you made if you made USDC a country, they'd be in the top 10 right now of incremental treasury buyers, because that's what they have to buy. So I wondered if that's.
I mean, it definitely. There's a convenience element to it, because you need a new natural buyer.
Exactly. So that's like that is Powell has changed, I think, is what you're saying, for the worse. But this administration is trying to be consistent with their okay, we think crypto, Bitcoin, stable coin's a thing, and we could tether it to what we really need, which is more debt.
Right. And if anything that can be done to protect the risk-free status of the U.S. Treasury note, thereby protects the reserve currency status of the United States.
Yep.
They're all connected.
Yep.
And at a time when the Chinese economy is on its knees and it doesn't have enough liquidity, I'm talking just cash in the bank, to buy the rest of the world and curry favor with other countries. Instead, it's like dumping steel in Germany. I'm like, Germany was your closest trade. You really are pissing off the Germans, Gee, I wouldn't do that. Anyways, anything that you can do to protect the Treasury, especially when the Chinese can't do much about it, is a matter of national security. That's why I'm saying central clearing of treasuries is a matter of national security. You never have one wealthy billionaire who happens to live in Palm Beach and used to reside in Chicago. You never have one person able to shut the liquidity off of a risk-free asset. Risk-free assets, by definition, are liquid. Centrally clear those puppies, they'll always be liquid. And Besant is, again, he understands markets, I think, probably better than any Treasury Secretary in modern times. Markets.
By a lot.
Yeah.
And how it all goes together, including other people's currencies. Now you have a breakout in the dollar, which would be interesting, which is not what we've had.
We have been very. The minute the dollar trade became the most crowded thing in the world, just the contrarian in me alone said, sometimes crowded ships capsize and sink. So we've been very constructive, the dollar here.
Well, the dollar, in a sense, needs to have a less dovish Fed, which is why it broke out yesterday. So it's kind of interesting if you were to, again, you played forward. If you know what the news is going to be.
Well, remember,
on
the dollar
CPI.
has been flying while the Fed's been on hold,
Yep.
which makes no sense. And now if we're going to get forced rate cuts, and it looks like with the next few payroll reports.
So you think catalyst, obviously you're in the camp that catalyst for rate cuts or dovishness is labor at the top of the list. I think CPI is going to slow next month. So
I
you
think
get
it's the
both.
number of dissents.
Right. But
I
you're going
think
to
the
have
number of
both
dissents.
now.
Yeah.
So in that environment,
Yeah, shelter disinflation is, I'm sorry, but that's 40% of the input of the CPI. You cannot deny that. I mean, Case-Shiller's, which is the most lagged data of all time, got a negative sign in front of it for 3 months in a row.
Yep.
So now you got rental disinflation, you've got house price disinflation. So there's nothing, you cannot stand in front of that train. Not even a spiteful Jay Powell can stand in front of shelter.
So if you believe,
disinflation.
if people believe you on that, and they believe me on inflation nowcast, which Besant does too, I think, or it's paid him to, then you'd be betting on a September rate cut. Because you get, like you said, this is a great time because I get all this data that's coming in.
I feel like it's last July, and the Fed's just not cut rates.
Right, and they cut by 50 last September?
And Bowman dissented.
Yeah.
First dissent since September 2005 was Bowman's dissent by a governor. And yesterday she dissents in favor of a cut.
Do you like her?
She's very smart. She understands the banking system very well.
Street smart.
She's Wall Street smart.
Okay.
She really is. And she's ambitious. No shit.
Because we have a lot of the other kind of smart at the Fed.
But speaking of Bowman, and back to Powell, he does want to go in May.
Yep.
But there's this person by the name of Mariner, I can't say his name. My kid's friends with a guy by the name of Rory, I can't say his name either. Mariner Eccles, this guy, right?
1930s Eccles thing?
And they named this building after him.
Oh yeah, the Eccles building, okay.
The Hard Hat building.
The clown show building.
And in 1948, Truman was like, there's the door. I am not reappointing you, at which point Eccles, who happens to have, rewritten the Federal Reserve Act that then became law in 1935. When you write a law, you tend to know it. And Eccles said, okay, I'm not Fed chair anymore, but I'm not going anywhere, baby. I'm going to finish out my term, and I'm going to make sure you don't marry the Treasury to the Fed.
And he stayed on the board, or?
He did, because that was his legal right.
Ooh.
Now, does Jay Powell have a legal right to stay on the board after May of 2026?
It'd be weird.
What would be the only thing that would cause him to do it. So
Spite.
thank you. I'm here until January 2028.
Have you
Sorry,
been,
I did not, Mom. Sorry.
Have you been approached by Paramount Plus yet?
No,
You're a fan of Landman.
I know.
You have like multiple episodes of government corruptness, lying. You have like, this is where it's at, right?
But
Like,
go back for
all
just
you
a second.
need to know is how to kill people.
I'm Italian. My Connecticut side of the Italian family is right up 35. I can be there in 10 minutes. Right. What if Jay Powell stays out of spite in May of 2026, just like Eccles did? What if what Eccles did to Truman, Powell does to Trump? What happens then?
I mean, I don't know.
Well, okay, something happens because
that's why we need the next episode. I mean, we gotta go.
Look, Adriana Kugler, her 14-year, she replaced somebody whose term had not ended.
Right.
So it was very abbreviated. So the end of her term is end of January, 2026. Now, if you keep belittling Powell, who wants to leave very badly, you can see it on his face.
Yeah.
He's aged about 30 years in like the last month. Because it's a caricature overseas.
Yeah.
It's embarrassing. Powell wants to leave in May, but he doesn't have to. So if you're DJT, you got one shot in January. Because if Powell doesn't leave, you have to choose somebody from on the board to be the chair. Which means whoever replaces Kugler, was it going to be one of the Kevins? We don't know. January's Trump's only shot if he doesn't stop it. And this is a discussion that Scott Bessent is having with Trump. Do you want optionality at the Fed? Then you've got to leave this guy alone so that he goes peacefully into the night in May. Otherwise, we've only got one shot in January. And it ain't going to be me. I'm not taking a demotion to be a governor at the Fed. Come May, I might make a lateral and go from Treasury Secretary to chair of the Fed. I might, but I might not. My name's Scott Bessent. I'm not trapped. But if you want the optionality to put me in May, you need to quit bullying that guy, or he's going to stay out of spite until January of 2028.
You and Bessent should write the screenplay.
Bessent went on CNBC sounding like he had just read Fed Up. He's like, there's too many PhDs. And I'm like, I'll be damned. Somebody sent in my audiobook.
Yeah. Well, I mean, to me, that whole, like, the clowning of it all, it's newsy, it's funny, gives us more cartoons. But it's really, to me, it's fourth turning type shit. Rich, it's like, this is finally, like, after all these years, from Fed Up to Danielle telling me I can deal with Powell, he's a little better than the alternative, which couldn't be worse than Yellen. But in my career, I'm like, when does this end? When does the lying, the bullshit, and why do you and I have to spend 53 minutes debating rate of change data?
I have a deep change.
When it could be just a machine who does it.
I have a deep question for you, okay? You are, at least in your mind, okay, now this is a real stretch, okay? You are a well-regarded PhD economist, very well-regarded.
Yeah.
And what is your perception of whoever's going to be chosen to replace Powell? Would you take that job? If you were a well-regarded PhD economist, would you be like, I want to be the patsy?
Right.
I want to destroy what's left of my career. Yay, let me be the puppet, please. Call me Arthur Burns. Call me Arthur Burns II. Go for it. I want to work for Trump.
Yeah.
If he doesn't stop this, he's not going to get a reputable person because nobody's going to want to denigrate their legacy by being, hey, I'm the patsy that Trump hired to take the Fed funds rate down to the zero bound and relaunch QE. I'll do whatever he says.
They have some really good candidates. They have Cash and Carey. They have Goolsbee. Both those guys are dumb enough to do it. I mean, Cash Carey, whatever his name is, he's had like 10 jobs in the last.
He'll do anything. I'm sorry.
But there are people that will do that.
Oh yeah.
Yeah, but you're saying that, well, anyway. What we're saying is actually, the question is this finally the end of the Fed?
We like Scott Bessent.
Right.
And we want somebody like Scott Bessent to run the Fed.
Right.
But we can't clone Scott Bessent.
Right. but you can replace it with data-dependent machines. You can replace
you
this.
can get
the
rid of a lot of
building
those
and
PhDs.
Yeah, the building and the hard hats, the clowning of it all. Metaphorically, it's like take
Yeah.
that shit down.
If you want to be data dependent, fine.
Right.
You can be as data dependent as you want. I got an algorithm for that.
Yeah. So that's good news.
Yeah.
I mean,
Look, when I said that the Fed needed to be, people got all mad at me. Why are you so anti-Ron Paul and the Fed? I was like, because the
why'd
Chinese...
you have to bring Ron into it?
I'm like, because the Chinese will cook our goose if we don't have, I don't know, anybody watching the largest financial system in the world. China, you know what, we're not going to have a Federal Reserve anymore. No central bank. We're going backwards in time. We're going to become an emerging economy, and just don't touch our financial system and just leave it alone, just like you've done with our with our intellectual property. Treat our financial system the same way you've treated our intellectual property. It's just honor code.
Mm-hmm.
No, we have to have a Fed, but you're right. We don't need all these PhDs deliberating, and we need a lot more discipline in monetary policy making, and we need some algorithms in there. Because if they say they're data dependent, then damn it, be data dependent.
Yeah.
Don't lie about it.
Yeah.
And they're lying.
Yep. We're going to have to end on that. Unless you want to tell us who you think would be like, you basically said you don't want to be the clown who takes the seat because now they have a hard hat for the clown. But if you had to pick somebody in transition, do you have
My
a thoughts
biggest
on
problem right now is that I want Scott Bessent.
that? He could be. No?
Unless Powell stays.
That was leaked, by the way. That he.
I know it was. Unless Powell stays.
Right. But that's doable.
Yes,
like Coach
but you'd have to
GM.
find a really good, okay. Don't love the man necessarily, but if Bessent was chair of the Fed and Diamond was Treasury Secretary, then I would sleep at night.
That'd be good. We might have to go for like Landman season 3.
Woo! It's being filmed, baby.
And you would be in it. You'd be really good in it, right? I think she's really good. I don't know.
I got Spurs.
She's got Spurs. Well, thank you very much. It's probably the first time we ever gotten kind of like a little, you know.
Well, we are talking about Billy Bob here, right?
Yeah.
Woo.
Yeah. Thanks for tuning in. We appreciate it.